Ed Yardeni, president at Yardeni Research, is joining us now to take some questions. Ed, it's a big day from global markets. Good morning, Prashant here, and thanks for joining us. Dollar has seen a substantial move lower. Yields are down 9-10 basis points in the 10-year, and equities, of course, have rallied on. So very constructive. And is it looking? I mean, should we what should we take away for price action here, the coming sessions as well? More coming on the downside for yields and dollar, and maybe upside for equities. Yeah.
Yeah. Well, I do think that the data we got today suggests that the inflation numbers are still moderating. The CPI, both on a headline and a core basis, excluding shelter, both of them are right around 2%, 2.1, 2.2%. So we're just waiting for rent inflation to come down. We know that's a laggard, and it is coming down even in the latest numbers. So I think the Fed's got a really good shot at getting 2% on the inflation rate by the end of the year. Meanwhile, the retail sales numbers didn't bother me too much because they apply to merchandise, and we've seen a tremendous pivot by consumers towards services. So I would say the economy looks pretty good. No stag and no inflation, as you said, and quoting Jerome Powell.
No stag, no inflation, got that. But the economy is looking pretty good even here in India. I mean, growth has been coming back. Inflation is largely under control, and we have a huge event upon us, which is the general elections. How are you feeling about the Indian market now? Do you think this could be another good year for equity market investors?
Well, it's been a very good couple of years already. The Indian market has discounted a tremendous amount of positive news, and looking ahead, the perception of investors is that things are going to get better, and I think that makes a lot of sense. I think maybe there could be some valuation issues, but all in all, the prospects for the Indian economy are quite good, and for the stock market as well. And I think that if we do get a scenario here where the dollar doesn't keep going up, it goes down a little bit, that would help emerging markets in general and India in particular.
Ed, 3 questions. 1, is a July rate cut on the table now? And 2, 50 basis points of rate cuts for this year by the Fed. And 3, you've also said that if the Fed does start to lower interest rates, that could create a melt up on the S&P 500, and then perhaps 6,000 is also on the cards by the end of this year.
Well, anything is possible in these markets, I suppose. Not anything, but that we do have something that's starting to feel very much like a melt up. I've been thinking for over a year that we could get to 5,400 on the S&P 500 by the end of this year, and that was one of the more optimistic outlooks. And here we are, only about 100 points away from getting there. So we could very easily get to 5,400. And yes, I'm looking for 6,000 next year and 6,500 the year after that. In a melt-up scenario, we have to consider the possibility that all of this could happen a lot faster. And in that case, this would be, the analogy would be something like the 1990s, the last half of the 1990s, where the stock market discounts a tremendous amount of good news, and then it sets itself up for a meltdown. I'm not rooting for a melt-up. Melt-ups can be a lot of fun, and we can make a lot of money, but we have to remember to get out of the top. And then what? Then we have to wait around until the bull market comes back. But at this point, I think the fundamentals are looking quite good. The market's got earnings on its side. Valuation is a bit stretched, but all in all, it's still a bull market.
Ed, here in India, because FIIs have been sort of sellers, big sellers, right, in May and even before this, over the last couple of months, is debate. And now because we are sort of closer to elections and in the election cycle, results are in early June. This debate is on that why are FIIs selling? Is it because they're nervous because of elections, or is it the global cycle a little bit? And of course, also the shift to China, because Chinese markets seem to have bottomed a little bit and seeing a bit of a bounce. Which one of the two sort of appeals to you?
Well, I think that people sometimes sell on the news. So perhaps as the election results become more apparent or easier to divine, to understand, we may have some selling, just kind of a knee-jerk profit taking. Look, I think India's stock market problem is too much of a good thing. It's done extremely well. There are people that have that have a lot of profits and may want to book them along the way here. But at the end of the day, it's still going to be a matter of fundamentals and valuation. And I think the fundamentals are looking good. The valuation's a bit stretched the way it is in the United States.
Okay, Ed, we'll let you go on that note. Thank you so much for joining us. Appreciate your time here on CNBC TV18. Have a good rest of the week. Well, that is Ed Yardeni, the president at Yardeni Research, about how to approach the markets. Let's take